Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
It's going good. I had some interviews this week that I'm really excited to get into. But as always, none of this is financial advice or legal advice because we are going to get into some regulation as well today. So use it for entertainment or educational purposes only. So the first thing that I wanted to cover is a discussion that I had with the team from Diamond Supply Co. I talked to Cormac. He is the CEO there. And then I talked to Rajiv. He is the CTO. And they're doing some really revolutionary things in the diamond market. And they're using Hedera extensively to do it. But I also think that they have some ambitions beyond diamonds. So listen in. Cormac, to start, can you explain Diamond Standard and the product that you've brought to market?
Yeah, so Diamond Standard is unlocking diamonds as an investable asset for the very first time. And it turns out diamonds are this forgotten natural resource because every diamond's a little bit different. They're not standardized. They're not fungible. So you can't have price discovery. You can't have futures and options. You can't hold them in an ETF because you can't mark a diamond to market. You never know what it's worth. But diamonds turn out to be the second most valuable hard asset on earth, right after gold. Diamonds are worth about 1.2 trillion. And our breakthrough is that we found a way to standardize diamonds. We created the Diamond Standard using computer science, and we produce these physical commodities, a coin and a bar. And the breakthrough is that these two coins are equivalent. They contain the same geological content, the carat weight, the color, the clarity. And the diamonds are inside. And since these are equivalent, they trade at the same market price every day. So we have a spot market. We have been approved as good for delivery to settle CFTC regulated futures and options, and we're developing things like ETFs. And that unlocks diamonds for investors to invest in really for the very first time.
In Hedera, we're trying to create these new markets, and that's exactly what you're doing. You're essentially creating a whole new market, right?
It wouldn't have been possible without the blockchain because the proof that these are equivalent has to move with the asset forever. If we go out of business, you still need proof that these 8 diamonds, where they're certified, where they came from, their carat weight, their color, are equivalent to these. So we put all that on the blockchain. And once we got, made that key step of putting all that information, we then were able to use the blockchain to also do all of the transactions. And now we've integrated the futures, the options, the spot price, and a currency all transact on this very efficient transaction medium.
So I want to get deeper into how you've leveraged Hedera. But first, beyond diamonds, do you have any other products in the pipeline?
Well, it's interesting. So we have some very key patents that have resulted from what we've discovered. And what we discovered is how do you do price discovery for individual assets and then standardize them into a fungible unit without we don't have any opinions. We don't do any price fixing. It's all done by the market. So it turns out you can apply that to a lot of different assets like carbon credits, like real estate, lots of financial products that are very similar like bonds, but we can aggregate them. One interesting thing we're working on, is right now it's just an exploration, is we are looking at using other gemstones, emeralds, sapphires, rubies, etc. And the problem is their markets aren't very large and they're not as easy to standardize as diamonds. So we're actually looking to actually brick all these together in one larger unit and create that fungibility. But we've been approached by a lot of companies that want to use our technology to standardize things besides gemstones.
I gotcha. Understood. So Rajiv, how exactly do you use Hedera?
So just to offer some background, when we started 4 years ago, our initial offering was on Ethereum. And, because of its reach, its mature ecosystem, acceptance with investors at that time. And it worked well till the extremely high and unpredictable gas prices made it unviable for us as a business to run on. So we considered other blockchains, and we finally decided on Hedera. The key characteristics that helped us was obviously, we believe in the governance model. We are an institutional product, so the council-based governance model really helps us. The security, the reliability, and most importantly, the low and predictable gas prices. So that absolutely helped us move to Hedera. Added to that was the addition of the token service, which was, for us, it's like a hand in glove, right? That's exactly what we needed, something we didn't need to build on our own, something that the platform provided. So the way we work on Hedera is we're quite an extensive ecosystem. We rely heavily on the Hedera token service and the smart contract service. We also use the consensus service for key audit events. We are a regulated entity, and it really helps us to create an audit log, on chain. Our physical coins and bars are represented as non-fungible tokens using HTS, and we leverage the KYC capabilities, for example, because we can only offer these to known participants as part of a regulatory license. So that really helped us that the KYC capability was inherently built into the platform. Now, what we're launching now is a fungible token called BitCarbon, which is a fraction of an asset token, which is a fungible token on Hedera. In addition to that, we have various smart contracts that control things like minting, custody management, conversion of assets from one type to another, management of the BitCarbon reserve, and things like that. We also have a peer-to-peer marketplace. Think of it as a centralized limit order book, which allows our participants to transact amongst themselves. We currently use USDC as the base currency. But that again has been live for the last 8 months and doing pretty well.
So looking at the size of some of those diamonds, those are some pretty expensive coins, if I had to guess. Fractionalizing that, you have to think that that's really important to give access to everybody that might be interested in your product. So once you get enough of those fractional interests, would you be able to take delivery of the actual coin?
Absolutely. So that's the breakthrough. And it turns out to be more than just a fraction of a physical commodity. And I'll give you an example. These are today $54,000 per bar. So it's not, I think I like that token, I'll buy it. These are 5,400. They're always 10 to 1 through the magic of math. But even a $5,400 token is not something you just on a whim buy. But what's the breakthrough with BitCarbon is that they're all worth $1 initially. And so it turns out to be an alternative to a stable coin. And stable coins are extremely dangerous. People are just now, I think, starting to realize, if you look at all the Silicon Valley Bank and Signature Bank, the reason they all shut down is because their asset base grew tremendously when interest rates were very low. So they put all that money they raised into low interest treasuries. USDC, USDT, they all raised tens of billions in a low interest environment. And now it's a higher interest environment. All of those bonds are discounted. So they've had huge losses in the asset backing. That can't happen when you have a physical asset behind your currency. You can always redeem BitCarbon for exactly the number of coins that are behind it. So it provides a stable and inflation hedged alternative to stablecoins.
It's really a fascinating concept. Cormac, how can people get involved with Diamond Standard?
Well, it depends on your interest. Most of our participants right now are investors. So we have right now over 4,000 funds, family offices, individual investors who have been building positions in the diamond commodity. And for them, it's just like gold. It's a store of wealth. It's a hedge against inflation or speculative asset. They've, in general, done well. The commodities have returned about 25% since we got our first approval. We had this big article in the Wall Street Journal. Since then, it's up about 25%. So it's been a profitable and stable, low volatility asset. So that's the number one way people get involved is they just buy the commodity. If you own the commodity, you also own the BitCarbon that are in it. The BitCarbon come out of the coin and bar, figuratively. What we're developing, though, is a whole payment platform where you can use Bitcarbon as a payment medium. And we have a lot of interest from casinos and especially outside of the US, in Africa, South America, a lot of interest from in countries where the currencies aren't so stable.
That makes perfect sense. Gentlemen, thank you so much for swinging by and adding new products to the Hedera ecosystem.
Our pleasure. Thank you.
Thank you.
So yeah, I mean, again, great to hear from a team that's moved from Ethereum to Hedera. This isn't a team that's messing around. They raised about $30 million, I believe, a couple of years ago now to build on Ethereum. And as they said in that interview, there were issues with Ethereum. It's a robust network. Don't get me wrong. It's secure, it's robust. It stood the test of time so far for general purpose use cases. But when it came to this sort of fluctuating gas fee, as we've known, an enterprise can't operate on a ledger when they can't predict their costs. If you're a high scale or your institutional use case where every single minimal cost is rounded up and sent to the CFO and forecasted and registered for X amount of years, how can you do that on a blockchain whereby one day your fees might be $10 and the next day might be $200? It's not feasible at all. And so it's great for us, I think, to hear that from a big company like that, which are coming from this institutional front, that the fixed fees are essential to them. I still don't understand how other companies operate on other ledgers. I really don't. But it's great to see another company physically coming out, vocalizing this thought, saying that the fixed fees are, of course, a massive reasoning for migrating, but also the governing council. It's like, again, as Rob Allen said last week, being enterprise grade means that we can facilitate enterprise. We have the standard to facilitate institutions, but we can also support anyone else. Enterprise grade is an accolade, which means we are the best of the best for whatever use case. And so to have Diamond Standard here again, almost migrating in stealth, is fantastic.
Yeah, couldn't agree more. And apparently there's some connections there between Drop and Diamond Standard. So we're going to try to catch up with both of those teams to get some more information on that as well. One of the big news in the crypto industry as a whole this week has been the moves as far as regulation, especially in the United States. So the first thing that I wanted to discuss is Bittrex. An action has been taken against them, pretty much saying that they have been operating as an unregistered securities exchange. They listed a few tokens in that they considered securities. An example is Dash and Algorand. We talk about Algorand all the time because I think technically they are our closest competitor, and they launched around the same time. I use them for price comparison a lot. They're working in the same space. So for them to be considered a security by the SEC, especially in this lawsuit, is material for the Hedera ecosystem. Now, there are some differences. There's Algorand, there's the HBAR Foundation. So there is some slight separation there, but you compare that to Hedera, which the governing council under Hedera, is 28 different blue chip companies diversified across geography and even time and industry and things like that. But that's just one aspect. You have the governance. You have a lot of the technical maintenance of the network is done by Swirlds Labs, which is just one of the members of that council. You have the HBAR Foundation, the Swiss Hashgraph Association. So those are two separate entities building out the ecosystem. And then we have accelerators and things like that. So it's a little bit more diversified across that. But and we're going to get into the congressional testimony by Gary Gensler. He is the chair of the SEC. He thinks everything is a security. I think that he thinks even Bitcoin should be a security, but because of some of the precedent that has been set prior by the SEC, he doesn't really want to go after that. But he certainly thinks that HBAR is a security based off of the comments that he's made. But when they have these suits and they just put a few tokens in each one, they don't want to put all their eggs in one basket. They don't want to give an exhaustive list of all the tokens they think are a security, because if some precedent is set in one of these cases, they don't want all the tokens to be wrapped up and maybe get a free pass if they want to move and have legal action there in the future. But the one thing in this suit that does concern me a little bit is right after the suit came up, during this week, we've had several exchanges delist Algorand. And of course, with Bittrex, they have now left the United States. They're no longer going to service American customers. And they were the first exchange that allowed HBAR trading in the United States. We still have Coinbase. We still have Binance US to service the customers in the United States. States. But, it's going to be interesting to see if Coinbase and some others delist Algorand, because if HBAR gets wrapped up in one of these suits, we could see a similar path. And certainly that would be bad for our market. And the other big piece of news this week was the chair of the SEC, Gary Gensler, testified before Congress. Just to give everybody a heads up of how the SEC is set up, there are 5 commissioners that head up the SEC, and then one of those is appointed as the chairman. And Gary Gensler, again, made it clear that he thinks most cryptocurrencies are securities in that. And he was actually asked directly if Ethereum is a security. He wouldn't answer that because I don't think he wants to touch it yet, but I certainly think that he believes that Ethereum is a security as well. It doesn't necessarily mean that that's the end all be all. This has to be litigated in the courts, and they have to figure out what is actually true by law. But, it really doesn't make sense, at least to me, to regulate these based off of securities law that's nearly 100 years old. So, just to explain what a security is, it's an investment contract that has, one entity at the center, and the investors are expecting some kind of return from that. So think of a stock where you actually have an ownership in the company, a bond where you're lending an entity, a company, money, and you're expecting them to pay you back with interest. But you compare that to cryptocurrency, which is mainly used as fuel to pay for fees in these networks and as a medium of exchange in some of these DeFi platforms. And if you were to try to regulate cryptocurrency as those 100-year-old regulations for securities are written, it would prevent a lot of the use cases that we are so excited about, and all of that innovation that's associated would essentially be halted here in the United States. The question is, do we need new regulation, new legislation? I would say that you probably do. You have to kind of go back also to, do you need cryptocurrency in general? And, we look at how much more efficient Hedera being 1,000 times more efficient than the traditional rails and Visa right now. I think the answer is very clear that yes, we absolutely need cryptocurrency, and you certainly need proof of stake. And that's another thing that muddies the water a bit, because of course you get a return, but really it's the best way that we've found so far to manage the security of one of these networks. I mean, Ethereum went to great pains to switch from proof of work to proof of stake because of the efficiency. And of course, that's part of the secret sauce for Hedera. Proof of stake is part of it. Of course, the hyper efficient consensus algorithm is a big part of that as well. But we certainly need them, and I don't think we should be using laws that are nearly 100 years old to govern them. And initially, it looked like when we saw, everything that came from the Hinman test, that they were going to have some new regulation that went along with this. But the regulatory environment has certainly gotten harsher in recent years, especially under the leadership of Gary Gensler at the SEC. The other thing that's going to be up for debate is, whether the secondary sales of these tokens are going to be securities as well. And there's been some case law that's been set up that is kind of leaning in our favor for that. The whole point of that is when these tokens are initially sold into the market, they can be considered a security, or that contract can be considered a security, but the underlying tokens may not. And that's another thing that's going to be really interesting to see how that hashes out in the years to come. So for example, you can have a security where the agreement itself, it's a bond or something along those lines, is the security, but what's underlying it will say dollars, or we'll say that there's a futures contract between dollars and gold. Dollars and gold are not a security. Dollars, of course, are currency, and gold is a commodity. But the securities contract itself is a security. Now, I know Hedera, when they have sold HBAR, they've sold it in the form of a SAFT, so a simple agreement for future tokens. Now, that is a security, but they believe that the token underlying it is not a security. And if the regulatory environment in the US determines that the underlying tokens are not securities, that can certainly allow exchanges to continue and so forth. But either way, it seems like regulation in the United States really needs to take a step forward if they want to be at the leading edge of this innovation. If not, it's just going to get pushed offshore. Do you have any thoughts on regulation there, Zep?
No one wants to be Algorand, let's put it that way. But I mean, these things need to happen. It's like, and I don't necessarily think if everything ends up as security, as long as everything does, and there's not winners and winners and losers being picked, I don't think it's necessarily a bad thing. I think we're long overdue some kind of clarity. What better visualization than the fact that the frustration within Coinbase at the moment, they're looking elsewhere. They're looking towards the UK. Brian Armstrong was in the UK this week with our Chancellor, with Rishi, talking about potentially moving Coinbase over So, I mean, obviously there's frustration coming from the roots up as well as the top down. I don't know how quickly it's going to accelerate, but, hopefully we're going in the right direction for some kind of sweeping regulation. But, who knows at this point?
Yeah, it really seems like you question watching the hearings with Gary Gensler, why he has that opinion. And I have to think, considering all the actions that have been taken across multiple agencies against crypto in recent weeks and months, that it kind of has to be ambition. He has to have his eyes set on either the Treasury as the Treasury Secretary, and this is what the administration wants, or something along those lines. Now, there are plenty of people that are taking the opposite side of this. There were countless representatives in those congressional hearings that took a very hard line against Gensler, pretty much arguing for cryptocurrency. And of course, we have Hester Pierce at the SEC itself, and she's dissented significantly against some of the actions that have been taken against crypto. So hopefully cooler heads prevail and we can start to attract innovation back into the United States.
And I think, one thing that we've definitely got on our side is, the fact that Brian Brooks has joined our board at the foundation. I think it was about 3 weeks ago now, we joined the POTUS Summit for Democracy. Hedera is the only Web3, layer 1 or layer 2 Web3 network using blockchain technology to show how it can facilitate things like, human rights, transparency, and of course, sustainability. We are currently at the heart of US governance, showing how Web3 can create real value as a real value-driven technology, and to facilitate things that no other technology can do. True value. And Brian Brooks actually quote retweeted that the other day, and he said, great work by Hedera, and quote unquote, and possibly something that will improve the administration's perception of crypto utility in the public sphere. So I think regardless of where things are moving, we've got some big people on our side like Brian Brooks, and we are there shoulder to shoulder with the government, showing them how Hedera specifically can facilitate real world value. So I'd like to think, there's some positive audience to that. Of course there is, but also some, positive relationships being built there beyond just having a look in. Hopefully that's the kind of thing that will really benefit us in the long term, alongside the things like SAFT and so on.
Having Brian, his expertise, his reputation, on the side of Hedera certainly helps. One of the platforms that is completely focused on compliance is Toko. And Toko is a subsidiary of DLA Piper, which is one of the Hedera governing council members and also the fourth largest law firm in the world. With this platform, they want to tokenize securities, which is something that is the focus of many traditional finance firms out there right now. And they had a discussion this past week, and I just wanted to grab some clips, some highlights to show everybody what they're doing at this point.
We designed Toko with compliance in mind, as you would expect from a global law firm working on this solution. I can remember early days getting a lot of curious looks from colleagues, partners, management. What is it you're trying to do here? I was a technology fintech lawyer, now trying to turn technology entrepreneur. But I think what's now happened through the industry's kind of twists and turns and the bad news stories and the regulatory clampdowns around the world is a recognition that the only way this is going to really progress is in a compliant and regulated way. And that's always been our ambition. Just pivoting to what's happening in the market that we're seeing, I'd separate our client base, the things we're working on, into two categories. One is TradFi or traditional, large institutional players who are now realizing this technology is going to enable them to do the types of things that they were already doing, but in ways that are either more efficient, faster, more accessible to a different pool of investors, be able to create products in a slightly different way, lower bite size, things like that to increase the investor pool. And so we do have a lot of projects that I think fit squarely within that category. We're working with a very large European fund manager at the moment on a tokenized fund structure that we're hoping to launch in the next few weeks. And as part of that journey, what we've been really doing is wrestling with how does it work today and why does it need and how can it be done better than that? So again, we've built features within Toko such as dynamic token supply management so that open-ended fund structures can be very flexible, allow money to come and go from the fund and for the issuer to control the number of tokens in circulation based on money coming and money going. So we've built things like dynamic supply management features and functions where we're putting lots of information on chain as well. So things like daily NAV calculations that are then getting put on chain, not only useful for somebody who's thinking about maybe selling, where's the NAV today? Oh, I can see it on my token, same place as where my asset's held. But it also provides historical data tracking and provides the ability for would-be new investors to come in and very quickly, again, not have to go and start searching for information, but all the relevant information is there so they can see it. And so we're really looking at cap table management. Transfer agent role is an interesting one because the blockchain seems to do a very good job of cap table management in a way that is traditionally being done by external third parties, whereas I think this is an area where the technology almost incidentally does a lot of that work in an immutable way, which is obviously going to be very, very useful from a regulatory compliance point of view as well. So there's that whole kind of side of the what we're working on in Toko, which is the digital evolution or digital revolution that's happening within traditional markets. And the Larry Fink quote there is a good example of that, where very, very large traditional players are suddenly on board in terms of the digitization of their industry, which we've seen in many other industries, is going to be happening in this tokenized form. So Toko's architected to not only allow you to deploy onto different chains, but also different token standards. So it is literally a pull-down menu as you're creating a token within the platform. You can pick, we've already integrated Ethereum, Polygon, Hedera, and Algorand, so you can deploy on those chains. And even within there, in fact, 721 was the very first token standard we did because it was a fractional real-world art piece. And so we broke up the artwork, and the 721 allows you to embed a piece of the picture. So we actually used that on our first transaction. 721 is, however, essentially designed for non-fungible tokens, which is fine, but you need to, essentially what we do is we work with our issuer clients to determine a number of factors and then help them pick the appropriate chain and the appropriate token standard to meet their business objectives.
So as Scott mentioned, they are leveraging several different chains, but the backbone of it, I believe, is still all built on Hedera. So that's great to see. I also had a great conversation this week with Arkhia. I know that they put out that blog post a few weeks ago that we discussed, talking about the infrastructure that they're building for the Hedera ecosystem and how they're using the Google Cloud tools to facilitate that. And Daniel, he's on the Arkhia team. He talked about how they're working together closely with Google Cloud to facilitate this transition to Web3. So listen in. Daniel, can you tell us about the post that BCW published on the Google Cloud blog discussing Arkhia and the infrastructure that you're building in the Hedera ecosystem?
Sure, Brendan. So as Web3 adoption grows and mission critical use cases are being tackled by DLT technology with Hedera, Arkhia aims to position itself as an enterprise-grade service and infrastructure. And we want to fulfill key requirements for highly available, scalable infrastructure and also a rich suite of APIs and tooling for developers and for all cases. So thinking about from financial services, ESG, DEXs, just any large institutions that want to continue to adopt Web3. It's actually been quite an exciting journey to partner with Google as we move forward and scale. And why is that? Because it just allows us to make educated decisions and rely really on world-class expertise. So we can make the best use of GCP, of Google Cloud Services, and also we tackle the necessary challenges. So thinking about services like Kubernetes, real-time notifications using pub subsystems, BigQuery, Cloud SQL. So we can confidently respond to all of these large-scale challenges. And we know that as volume and demand increases with Arkhia, we can auto-scale with the demands of the network.
All right. So, of course, you mentioned Google, and that's certainly going to come up when you post something on their blog. What does Google Cloud's involvement look like? Are you simply using their services, or are there deeper collaborations between your teams?
So we have a close relationship with the Google Cloud team, and we do sync up over key decisions when we decide to bring a new service on board. So necessary strategies for scale and performance, thinking about and making educated decisions about DB tuning, low latency, any streaming challenges we may have, or for example, maybe utilizing in the future key tools like BigQuery. So these are all done with the guidance of the best in their field, right? So that there's, I guess you could say, a direct line and channel where we can make sure that we're making the best steps and educated steps. So avoid any poor decisions along the way. So when our systems are up and there's new services up and running, we know that, that type of availability and performance is up to the level that we need.
Now, I know that one of the Google Cloud representatives at one point said that their mission is to onboard the next 10 million developers to be able to onboard the next billion users into Web3. And I'm sure that Arkhia is part of that push. So knowing what some of the other BCW products are, I can probably guess, but the blog mentioned follow-up posts that BCW will put out. What's the BCW team planning on covering?
So the other two blogs will be for, like you said, for the other BCW products. So one will be on HashBoard, the interoperability platform for Hedera, and the other one as well would be on Blockport, which is multi-chain data analytics in real time.
Okay, I actually hadn't heard of Blockport, so that's actually news to me. But Daniel, thank you so much for the update, and we're looking forward to those upcoming blogs.
Thank you so much. It's been a pleasure to be here and getting all these questions, and I hope it's been useful for the community. So I hope to see you soon, Brendan, and thank you for your time.
On the note of this sort of Google Cloud, sort of institutional adoption / work going on here in our ecosystem, we then turn to Blade Wallet again. And last week we discussed their dual wallet feature, whereby you'd have both an Ethereum network and a Hedera network operating within the same wallet. You can click between the networks. And as we discussed last week, this is kind of the Trojan horse. If you can get Ethereum users in where the most liquidity is, and then show them they can save costs, save money, increase speed of transactions just by pressing one button in their wallet and interacting with our EVM rather than the traditional Ethereum one, that's a big, big leap in itself. But then you add the Blade link. And so this is basically a no-code tool for developers or organizations or companies to install what is essentially a banner or a pop-up or a QR code. It can be for whatever it might be, like a giveaway or proof of attendance or token gating NFT, whatever it is. You click on this link, you put it in your application interface or your website, and it takes you directly to Blade Wallet, and it takes you through all the process without you having to do any coding or anything like that. And so imagine you're a startup or mid or even high tier company on Ethereum, and you have this ability to use Blade Link, which is so easy for your clientele to use. It's been used by LG Art Labs already. It's been used by DLA Piper through Toko. It's been used by Koala Hash Club at different events. If you can put this on your website and you enable that workflow, that stream, that pipeline that easily, and then again you go, actually, why am I doing this on Ethereum? Let's do this on Hedera. So you're increasing the accessibility of users through Blade Link, both for your user and yourself. You can reduce those costs just by switching it to Hedera. I think, there's a big value proposition there and a chance for us to steal a lot of, bridge over a lot of liquidity, not steal it. Hopefully those two roadmap developments by Blade will be a big, big changer for us in driving people over.
Yeah, it's exciting. This is how Sammy, the CEO at Blade Wallet, explained it in a tweet. He said, Blade Link plus Ethereum capability equals massive ecosystem growth. In a nutshell, these buttons are a Hedera value delivery mechanism via socials, emails, and flyers via an HTTP link or QR code. Create a Blade link and send it to your community. No fuss and no dev effort. And this is for both fungible and non-fungible tokens. All right, Zep, so let's take one of our famous hard left turns. We're going to talk about Rob Allen's new role. It is within the Hedera ecosystem, so he's not leaving us, but he talked all about it in this week's Shark Bites. Welcome back, Rob. How's your week?
Hey, Brandon. It's been an interesting one.
They always are, right? So I hear that congratulations are in order. You have a new role in the Hedera ecosystem. Can you tell us a little bit about what you're going to be doing?
Yeah, absolutely. Thanks, Brandon. Yesterday, we announced that I am transitioning from the HBAR Foundation to the Hashgraph Association. I've taken a new role as executive director at the association with responsibility for what we call the Hashgraph Enterprise Program. I'm going to be dedicated to supporting and activating governing council use cases and all enterprise use cases everywhere across the planet. So I'm very, very excited about that.
Yeah, you should be. You've been pretty much solely focused on Hedera for the past several years in multiple roles. You were a council member representative. You had your position, of course, at the HBAR Foundation, and now this. What has caused you to dedicate pretty much your career to Hedera over the past several years?
Well, as Greg Scoward says, I'm using all the seats. I'm a Hedera fanboy and always have been since I first met Lehman and Mance back in 2017. And I'd been looking for the technology of the future, the technology that I always envisaged as payments and financial services guy over decades. And I saw that in Hedera. So yeah, I've done everything I can to add value where I'm able to. I was working at PwC back in 2017. We were building blockchain platforms for banks, and Hedera came on my radar. So that was something that I wanted to stay close to. But at the time, like you, I think, the only thing we could do was be part of a community, part of the Telegram groups, and after open access, when our HBAR was starting to be distributed, we kind of had a really good kind of group that was engaging and sometimes very interesting. But the technology was always the thing that kind of drew me. And after starting a couple of startups and then the FPOS work that I was doing enabled me to look at micropayments, and the entrepreneur in residence role that I had when I was building the Connect ID platform for FPOS meant that we were able to do some great experimentation and this big proof of concept, which ultimately led to us being invited to join the governing council. So, I'd been this journeyman through the ecosystem, and post FPOS, I was, did some, what else was there to do than just help Hedera, which I did with Lionel and the engineering team and Nigel Clark and the guys. Then we set up the foundation. So I was part of the working group from the governing council that wrote the terms of reference, the RFP for the foundation. And when Shane was appointed as CEO, he asked me to join him to help bootstrap that foundation, which I was delighted to be able to do. But the Hashgraph Association has been around for as long as the foundation. People seem to forget because Kamal Yousefi and Stefan Dice, when they set it up, they had a different trajectory to the foundation. And it's been super impressive. It's been focused largely on enterprise, although they run an innovation program for startups as well, which Twitchital is going through. And it has a different approach to foundations. The foundation is grant giving and provides that business development functionality, a great deal of focus on the Web3 end of the spectrum, the DeFi and the crypto. Whereas the association has gravitated towards enterprise and Web 2.5 and big complex use cases for the Hedera services. And then there's a kind of more of an accelerator approach, there's a sort of delivery support approach through the projects. And being a delivery guy and being an enterprise guy, when I was offered the role of this new enterprise acceleration program, which we call the Hashgraph Enterprise Program, then I was delighted to be able to say yes. So that was my journey. What about you, Brandon? Do you remember those days? I mean, the Telegram groups and you were always on YouTube, kind of pushing the HBAR bull message. So is it a blur, or do you remember every element in detail?
I remember it all. So, of course, I've dedicated pretty much my career to the same thing. A little bit different from you because I've had to pretty much change industries completely, or I have changed industries completely. And the reason that happened is initially I started out as just an HBAR investor. And as investors should, I would reevaluate my thesis on my investment over and over again, right? Making sure that thesis was still sound, that my investment was still sound, and I wanted to remain involved. And when I would do that research, I would say, well, I have this information now. I might as well put it out there. And I would do the bull case videos and stay engaged on Telegram. But I really didn't have a choice but to move into this as a full-time career. My last career, it was either 100% or nothing. You were all in, or you couldn't have the performance that you needed for that position. I was managing hundreds of people. So I decided that I could have a 40 or a 45-year career there in oil and gas, or I could try something new, right? And I love covering this ecosystem every week. I get to talk to interesting people like yourself, talk to Diamond Supply Company this week, which was really fascinating. And that's, organic adoption. So I was fascinated with that. Talked to Arkhia, who's working with Google. Love focusing on my investments. Really got into DeFi over this past year. And of course, like you mentioned, building a business, building Twigital. Just like any startup, it's hard to get something like that off the ground. But Jesse and I believe that there's a lot of potential there. So that's going to be a blast too. So really, I can't imagine having done anything else, even though it seemed like at the time making that transition was a big decision. It really wasn't a decision at all. I pretty much had to do it if I wanted to be happy with my career. But, what about you? What were your thoughts there in the early days? Do you reevaluate Hedera on a regular basis, or are you just a fanboy, like you mentioned?
It's always been from an engineering perspective. I hold HBAR, but I'm too lazy to be an investor. I'm a hodler, and that's just almost a side benefit. The technology always excites me. The opportunities to do really interesting new things with this technology are what make me get up in the morning. And I've really enjoyed the last 18 months with the foundation, working with startups. I go to meetups and I'm talking about all these great fresh ideas all the time. But the big use cases, the big enterprise use cases, the things that are going to drive this next phase need a lot more support, a lot more kind of drive, a lot more engagement with business sponsors and business strategies, and enabling the internal politics to kind of flow. And I'm quite good at that. So maybe the next 18 months is, where I focus there. We've got some great ideas for the association as well, for growth and co-investment and regional focus. Some of the announcements that have been coming out of the Hashgraph Association over the last few months, like the partnership with Orange in Northern Africa, and some of the university hookups, as well as the cohorts that are going through the Hashgraph Innovation Program. All of these are very, very exciting developments. And to be able to join up, the governing council, I mean, they're doing very well, the governing council, I have to say, in terms of delivering, real world production use cases. But I'm not going to accept that as a as a final outcome. Every one of those governing council members could have 2 or 3 or 4 use cases, right? So, and then all of their peers could learn from those lessons, and they've got their own use cases. And we're seeing patterns of similarities, around ESG or around payments or around supply chain or around novel uses of NFTs or use of stable coins. That these are common design patterns that can be rolled out and again and be differentiated within the business strategies of those businesses. So what we're trying to do is to grow and scale and accelerate that adoption at the enterprise level. We're doing it with partnerships, we're doing it with alliances, we'll be doing lots of training of engineers and certification in order to seed that approach to enterprise delivery. But to answer your question, I get bored very quickly. So, I've always had like a 2-year cycle. I think it goes back to my army days where you kind of had 2-year postings, and I'm very nomadic. And so I kind of go all in and really, really kind of focus on one job and drive it to a point and then kind of think, right, it's time to move on and do something else, right? It's just Hedera is very sticky for me. So I don't escape the gravitational pull too far, but there's always a job to be done. And if I can add value, then, I'm like like a kid in the candy store. I've got all the tools, all the candy there to play with, and some great people to do it with as well.
For sure. I am curious, though, to see if it's the most success that's going to come out of Hedera, if it is going to be on that enterprise level, or if it's going to be some of the startups that grow, like, we saw with the internet. Amazon started as a garage band company, or Google and so forth. I think we might see a lot of that as well, where not necessarily the enterprises, but the passionate community members, startups, developers that start from the bottom and build businesses from the ground up. I'm really starting to lean toward that being the most success we see come out of this ecosystem.
Well, in 2 years' time, I'll let you know because I'll have switched somewhere else. But don't tell Kamal that. I'm with him for the long term. No, I think you're right. And we saw that in the post the dot-com boom and the bubble, and then the residual survivors became the original unicorns, and then went to grow to be the tech giants that we know today. Of course, we'll have those in the Web3 space. Of course, we will. And I'd like to think that they'll be on Hedera, because Hedera will be the technology that kind of persists and lasts over time. So absolutely, that's going to happen. But I think some of the incumbents will help us get there as well. They won't all die away. Some of them will pivot. Some will kind of reestablish their dominance using Web3 technology, and we'll be meeting in the middle as well. So it's very, very exciting times.
Yeah, well, it's going to be fascinating to watch. Rob, once again, congratulations, and we'll see you next week.
Thank you.
I mean, as always, it's fantastic to hear from Rob, and I really couldn't be more excited about him making that move. Obviously, I'd love to have him at the foundation. As he said himself, his real expertise is in this more enterprise side of things, which is what the Hashgraph Association is targeting more. One bite from Shark Bites that he came out with there was that every single council member could have 2, 3, or 4 use cases. Once you set that blueprint, once one governing council member sets that blueprint, maybe it's Atmo.io with supply chain, maybe it's ServiceNow with the ESG stuff, you create a blueprint that they're all going to be safe using within the same network, using the same technology adopted by other Fortune 500s. All they need is one person to come out, do that, not even proof of concept, but roll it out, see the success, take notes, and implement it when they realize the value's there. And so I'm really excited to see Rob develop these use cases with them, create those blueprints for them. And that's just for the council. We know that there's other enterprises involved. We know that the Hashgraph Association just came out with Orange, the world leading, one of the world leading telecommunications networks, with 286 million customers worldwide. The Hashgraph Association is working directly with them to drive fintech innovation in Morocco. So whilst the governing council is there with 2, 3, or 4 use cases potential each, theoretically, you also have these other big hitters that the association is working with to drive this other side of enterprise beyond the scope of our council. And I believe they said they want to facilitate about 40 enterprise use cases a year on Hedera, which is just like staggering. When you look at what 1 or 2 enterprise use cases can do on our network, and you think that compounding by another 38, it's mind-blowing. And, with that kind of stuff, you'd expect the revenue, of course, to go up with the network, the general reception from other builders to go up, more eyes to be on our ecosystem. And so, yeah, I'm very excited to see what Rob delivers there. And I don't think it could be going to a better place.
And Rob is an absolute pit bull. So when he says those are his goals, it's not just smoke. He actually thinks he can do it. So I caught up with the team, another hard left turn here. I caught up with the team from Legends of the Past this week. What are your thoughts on that game in general before we get into that clip?
I think their value proposition on Hedera and even beyond Hedera in Web3 is as a very high quality mobile game. Mobile gaming is bigger than console gaming. It permeates across the globe. Everyone has a mobile phone, not everyone has a PS4. Everyone has a mobile phone, not everyone has a console. Anyone can participate in this market just by having a cheap smartphone, which is what most people have. It's the same thing as banking the bankless. Everyone has a smartphone, so you can get them into financial services. Everyone has a smartphone, so you can get them into mobile gaming. And when you take that principle and you realize that Legends of the Past have a designer from Clash of Clans, which is one of the biggest mobile games in the world. They've got an ex-Ubisoft team who worked on Assassin's Creed. They've got an ex-PlayStation member. They've got the grade of builder to make this a very strong name. They've got the vision of Basil, i.e. the CEO, co-founder. And so for me, just all those things, they suggest there's going to be a great success with this product. And having spoken to Basil, learning how passionate he is about Hedera, how passionate he is about the ecosystem, but of course he's a gamer through and through. And you need a gamer to be building, and they've chosen Hedera for all the traits we've always discussed. And this, I think, will be a big, big success for us in mobile gaming. So excited to hear what Basil's got to say now.
Well, let's hear what he has to say. At the moment, many of our game builders are leveraging NFTs for in-game assets. Fungible tokens are in some of their roadmaps as well, but what are your plans for fungible tokens or in-game currency for Legends of the Past?
So basically, we want to have two different kind of tokens. We'll have some utility tokens. So for this, we have two tokens, the gold and the gems. Those are tokens that only have utility within the game, within Legend of the Past. So they will be useful for every players, whether they are into crypto or not, to easily and effortlessly own some artifact and trade them and use them. So they will use the gold and the gems to level up the artifacts or to trade them on the marketplace. And at the same time, we also have the LOP, which is a strong token that is convertible, so you can trade it against other crypto or into fiat currency. And the LOP will be a premium token to reward a member of the Legend Committee. It will also provide some governance. It will also be used to trade the stronger artifact, because the first level of artifact, which are NFTs tradable on the gem and the gold, if you upgrade them and when they reach a certain level, you can later on trade it against the LOP to create, a progressive experience, to take Web2 players by the hand and progressively make them understand and feel the thrill of owning an item, whether it be an NFT or a fungible token within a game.
Sure, understood. Now, what do the tokenomics look like for the LOP token?
So again, the idea is to take Web2 players by the hand, make them understand the thrill of trading NFTs with the gem and the gold, while the LOP will be used to reward members of the Legend Committee. Meaning that when you own a legend, you are a member of the Legend Committee. So if you own Clio, for instance, when we do the sale of Clio, only 1,000 NFTs, so 1,000 seats in the Legend Committee. And those people will have some governance responsibilities, meaning that they will be the one who will elect the representative for weekly tournaments, equip them with the strongest artifact, and those representatives, they will represent the whole Legend Committee against other. So Clio Committee will battle against other legend, and out of those 6 committee, they will have like 2 winners, and these winners will be the one who will share together the reward in the LOP token. And so we are using it to reward as esport tournaments, to reward the committees that are playing well within the game. And what's also important is basically you don't need to be a gamer to own a legend, because we'll have some people who are investing in the game by investing into a legend to have the weekly earnings in the LOP. But if they want, they can rent out the character, Clio, for instance, to someone who plays like this. They will share some in-game, the utility token, the gold and the gem between the gamer and the investor. And the investor will keep his governance seats and secure here his weekly earnings in LOP.
Very cool. So now this is something that's brought up a lot when it comes to gaming, the apprehension for Web 2 gamers to move into Web 3. You've talked about this a little bit so far, but I'd like you to expand on how you're providing value to both those Web 3 gamers and the Web 2 gamers.
Yeah, absolutely. And I think, first of all, I think this comes from the game itself, because we are taking the time and we have a strong team that have the experience to create a unique gameplay that can last over time after like a couple of years. That's why we wanted to have a tokenomics, a reward mechanism that is also sustainable and doesn't last only 6 to 9 months. That's why those Web2 players, people will enter easily. They don't need a wallet, because we'll be using some self-custodial wallet so that the players can only connect through like an email and a passcode. And progressively, he will earn some fragment of NFTs, some fragment of artifact. And when they spend the utility token, the gem, they will be able to mint it, create it, own it, and then they can level it up or trade it to other players. So basically, all of those interactions that will happen, on Hedera, using the utility and those NFTs, he will understand and feel them for free, because he hasn't spent into the game at first, and progressively he will discover, and he will see that some NFT holders that have purchased the legends and are member of the committees have this premium experience, so he will want to participate. And so what we've done is we created a middle stage between the Web2 players who arrived and discovered the experience of trading NFTs against utility token, and then on top we have the NFT holders, legend holders, member of the legend committees, and in the middle we'll have the legend followers. So basically the idea is to take Web2 players, they can purchase, because like they understand the utility and the governance aspect of it, so they want to get their way into the Legend Committee. However, the price to entry is too expensive because there will be only 1,000 NFT per Legend Committee, so the price might be expensive. And so if they want to have this middle stage, if they purchase, hold, and stack some of our LOP in the Legend Committee Common Vault, well, in that way, you show that you are a follower of this Legend Committee, and this will give you some governance, but also some LOP and some gem stackings, the utility token within the game. Therefore, that's a way of incentivizing players to, well, having access to the premium experience, but like progressively only purchasing like few dollars to hold a little bit of LOP and to stack it in the legend that they want to follow. And then they will have progressively some gaming utility, governance, but also some financial, because if they stack the LOP, they will have some yields, so some earnings in the LOP. So that's why we are taking them by the hand and making them experience exactly this. And one last thing is regarding the representative within during the weekly events, during the tournaments between the Legend Committee, the different Legend Committee. Well, those representatives they don't have to be a member of the committee itself. So it could be like anyone who plays with Clio. And the beauty of that is that we have now aligned interest between players, member of the committee, because they will want the representative to win because they will have higher weekly earnings depending on the performance of the representative. And at the same time, those representatives could be Web2 players playing for free, but are just super skilled, so they want to represent the team. And they will also have some LOP earnings, and they will share some in-games and financial rewards out of it. So like this, we have those multiple interests that are aligned. The idea is to take Web2 players by the hand and to connect them around these historical characters to project themselves and progressively discover the Web3 experience because they will want to participate and to have a role, a governance seat in this Legend Committee that they are a fan of.
Yeah, it sounds like easing them in is definitely the best strategy. So focusing on the Web3 gamers, how should HBARbarians get involved at this point?
So we have two steps, I think, this year regarding how we are financing the game, both from a private point of view, where we are discussing and raising with funds, with crypto and gaming VC. So that's the private aspect. But regarding, it's important for us to co-build our game with our community, to build it with them. And so right now we'll have two kind of sales this year with the HBARbarians. The first one is a sale that will a first sale that will start next week. It's the first batch of the Infinity Jar. The Infinity Jar is the strongest artifact within Legend of the Past. It's imbued by the god. What's important is it will always airdrop you and give you heaven keys for future drops, because it's very difficult to enter the Heaven of Legends. And if you want to participate in the direct sale of Clio or any legend who have a seat in the Legend Committee, the best way to be sure to participate is to have this Infinity Jar, because it will always airdrop you some keys before the drop, but also give you some in-game rewards, whether it be artifacts, gems, and gold, or also some financial rewards, because you'll also have some airdrop of LOP. So right now, the direct sale that we're doing is this Infinity Jar. It's also associated with the value of LOP. So while LOP grows, the value of the jar grows as well. And then it also will give you access to those Legend Committee direct sales, because again, if you want to be a member of Clio Committee or the rest of our legends, you'll have to have an NFT of this legend.
And what marketplace are they going to be able to get access?
So regarding the mint, we are doing the mint site on our website. So we already tested and we did and used it in the last months and weeks to test it with our early adopters, early community. So we have created a dynamic experience. It's not a static website, but we are creating something that will progressively enter into the Heaven of Legends to participate. So the mint site will be on our website. The first mint will be next Wednesday for only Heaven Keys owners, because we've been doing some quests and challenges on Discord and on Twitter to give away the first Heaven Keys. And we are nearly around 100 Heaven Keys that are being distributed. And so the first 100 Heaven Key owners will have access to the mint site and will be able to participate and purchase the first batch of Infinity Jar.
Well, I'm really looking forward to getting involved. Thank you so much for swinging by. Good luck with the things you have coming up over the next few weeks, and of course, your longer-term roadmap as well.
Thank you very much, Manan.
So, Zeb, I can't wait to play Legends of the Past when it comes out. It sounds like that's going to be early next year. All right, so another thing that came out this week is, of course, Earth Week, and Hedera being the most efficient network. They certainly want to highlight all of the refi use cases that are getting built, and I know that they had the better part of a dozen use cases that Hedera highlighted. Did you catch that?
So I think one thing to really sort of bite down on here is that the green narrative is used by a lot of different chains to say that their chain is very sustainable. Of course, as we know from the University College London report, Hedera is the most sustainable at the layer 1 in terms of carbon emission than any other network by, orders of magnitude. And so we've already won that narrative if you use that alone. But the way that we differentiate ourselves there is we're not just sustainable. We are also building the next generation of sustainable markets, green financing. And that needs more than just an efficient ledger. That needs the infrastructure, like the Hedera Guardian, like the ARMM, the build on top of that ledger to drive real value that otherwise can't be driven. And so, of course, we've got the best mandate at the bottom, the best green mandate, but the Guardian combined with the ARM is best-in-class infrastructure for creating a new generation of completely granular, completely traceable, efficient green financing markets that are opened up to everyone. And so in the last, year since Sustainable Impact Fund has really been around, we've seen massive growth there. And, this isn't just funding coming from the foundation to fund green projects. We've had some of the biggest projects from other chains like, Flow Carbon say they're integrating our Guardian because it is the best in class at what they need to facilitate. They're one of the big carbon credit creators or producers within the refi ecosystem, and they've organically come over to Hedera. You've got Solid World doing the same. Then, of course, you've got Dovo and countless others. And that's only scratching the surface. We've got, I believe I counted about 18 public announcements that we've made through the Sustainable Impact Fund. And that's not even taking into consideration that the Guardian now is the biggest pool of open source digital methodologies in the world. The Guardian is, as a piece of infrastructure, being adopted by everyone. And I think that really is going to be our first thing that takes Hedera sort of through the levels of adoption. And of course, Rob has doubled down on this. He said that ESG is going to be a massive thing on Hedera. And we're seeing this being played out. And I think that Earth Week was a great way of highlighting that again, not only are we the most sustainable in terms of emissions, but we're also genuinely changing the world in terms of these green financing markets, unlike any other chain. And I'm sure this year is only going to be more of that trajectory, more of these ecosystems migrating over to us from other chains. Even when we look at the Summit for Democracy that we saw recently, that's the kind of place where we can really, really show the value of this ecosystem to the higher powers that be. And I think, it's going to be a big one from us for sure.
Well, you see how the Guardian ecosystem is growing and how all the pieces and parts are fitting in. We're not going after the pie as it is now. Because of the efficiencies that Hedera can bring to that market, the pie can grow. So when Rob says all of it, that's going to be a really big pie, and it's going to be really impressive to see how that market develops. All right, let's get into some network analysis. All right, the network was upgraded yesterday, and when that happens, Atma.io actually steps back up. So we've only had about 41 million transactions over the past 24 hours. Only 41 million, right? So it's still a huge number. But you can also see how they kind of backlog those transactions. And when we plateau at the new high, it's higher than it was before as it catches up. Taking a look at the smart contract transactions, we've only had about 12,000 transactions over the past 24 hours. And the reason for that is we're seeing a partial outage on some of the nodes within the Hedera network. So 0, 3, 4, 7, and 22. And some of the users in DeFi are trying to ping those nodes. And if you try to go to one of those nodes first, the transaction is not going to go through. So I think that's causing some hiccups in our DeFi ecosystem. And all the users need to do is switch to another node. But I'm sure that's going to get figured out before too long. And Zeb, I guess the big news this week when it comes to transaction volume is we crossed 7 billion transactions. Now we're doing that every few weeks, so the billion crossovers are getting less important as time goes on. Taking a look at time to consensus, we're sitting at just under 5 seconds. And Zeb, we've had a pretty good milestone crossed when it comes to account growth as well. What do we see there?
Yeah, so we finally crossed 2 million. I mean, when I say finally, we were talking about it last week. So I think that marks 1.7 million accounts since the genesis of the foundation. I know, of course, it's not just the foundation. You've got Swirls, you've got the Hashgraph Association, you've got so on and so forth. It really marks the start of what has been retail adoption for us. These accounts aren't coming from enterprise. They're coming from retail users and the network effects that they bring. So for me, the account metric is definitely an important one to follow. And I'm sure that's only going to keep going up. And 2 million is no small feat. And, the more that account goes up, the more people we have on Twitter, the more people we have in Telegram, and the more marketing we have as a force collectively as a community. So a great metric for us to follow there. And I'm really excited that we crossed 2 million.
Absolutely. There's no question. That's a big milestone as well. And going down to our fungible tokens, in the top 10, we have Wrapped HBAR, Dovu, Sauce. I do see a new one in there, Wrapped AVAX, so that's good to see. And of course, USDC, and I see HBAR Suite is in that top 10 as well. And Zeb, we can't forget about Karate Combat, which announced that they raised $18 million. It's just really good to see that businesses that are focusing on building on Hedera are getting this kind of support in the open markets. They're going to be doing their Karate token drop, which of course is built on Hedera on May 10th. So keep an eye out for that. And then they're going to have the launch of their mobile app, which is also going to be out in time for their next really big event, which is going to be on May 20th. And I'm planning on being down there in Miami for that event. So Karate Combat is hitting on all cylinders. And in our non-fungible tokens, we see our usual suspects with Ashfall. We have the naming service, the cosmetics company Elfu. Like always, we also have zombies in the top 10. And with that, let's go ahead and get into DeFi. Taking a look at DeFi Llama, the total value locked, not including stated liquid staking, is at about $33 million. Saucer Swap is down to about $21 million, $8.5 million on Pangolin, and $3 million on HeliSwap. The drop can be attributed to the overall drop in the crypto market, not to withdrawals. Looking at farming rewards on some of Saucer Swap's popular trading pairs, HBAR X is at 14%, 34% on HBAR Sauce, and 40% on HBAR USDC. The farming rewards for Pangolin are HBAR X at 21%, 82% on HBAR USDC, and still an impressive 260% on HBAR and PBAR, their native platform token. Moving on to the HBAR and crypto markets, unsurprisingly, the crypto markets have taken a hit this week with all the regulatory uncertainty. Bitcoin is down 9% over the past week to just over $28,000 and down 2% over the past 24 hours. At the time of recording, HBAR is down about 9% as well to just over 6 cents, which should offer some support. If we break through, 5.8 cents should act as support as well. If we can reverse and start heading north again, 6.4 cents may offer some resistance. All right, Zeb, that's pretty much all we have. Is there anything else you'd like to pass on?
Yeah, I mean, I think this week has again been a mark of the institutional side of Hedera. We saw Diamond Standard naturally migrate over from Ethereum, choosing Hedera for governing council, the low fixed fees, and so on. We heard from Arkhia with their work with Google Cloud, and we've seen Blade Labs, who, of course, are trying to sort of pin down the enterprise side of things, again, making it easier for institutions, for network developers or ecosystem participants to leverage things like Blade Link or the dual wallets as laid out by what they've done with LG Art Labs, of course. But yeah, just in terms of this week, I think institutions, again, we've got to focus back there, which is great. And as we know, institutions are the rising tide that lifts all ships for all of our builders. So the more institutions, the more success for us all, really, and the more legitimacy we have across the board. So excited to go into next week. I'm sure we'll have some good news there again. And yeah, that's it for me.
That's what it comes down to, and we talk about regulation. The main thing to push them on the right side of things is to have these value add use cases, especially outside of speculation and the normal crypto universe. We add value across different industries, and I think they're going to start to come around fairly quickly. All right, so next week, I'm not going to have a weekly update, a normal weekly update on Friday, because I'm going to be down there at Consensus. Certainly swing by the Hedera booth. I'm going to be representing the HBAR Foundation, but we also are going to have our Twigital booth there, so we can try to tokenize some physical objects. It should be a lot of fun. Also, on Monday, we're going to have a Twitter space put on with Generation Affinity, so you can learn more about Twigital there. To close it out, I have a clip from Cosmium from their game. It looks like it's going to be really exciting, so check it out.